Hello guys, welcome back to another episode. Today we're going to talk about the portfolio management, and we're going to talk about actually how to manage portfolio to make $1 million. In today's video, we're going to uncover the whole concept of the portfolio management, the categories, rebalance, market indicators, how we understand where we should have more stable coins or more volatile assets. We will talk about the DeFi revenue, and also I will show you my own dashboard, how I'm managing portfolio and what you can do with all of this. And in the end, we'll talk about risks and in general the financial literacy, what we could do. So let's start. Okay, but before we start, I would love to show you that we have also farming reports in our platform where you're able to find the different opportunities on stable coins and where you could provide the stable coins to get a reward. There is a database with different DApps. We are sourcing the information across the market, attaching our filters, testing ourselves, evaluating the risk, and we're doing those reports every couple days, so you will be able to find the best farming opportunities and earn some reward on your liquidity, like we are doing that with Convex and USDC, USDF, and ReUSD and SReUSD. Is actually those opportunities are listed here: USDC, USDF, and ReUSD, SReUSD. We took it from here, and we provide a liquidity from our portfolio, and everything is described in the reports and in the farming opportunities. So let's get back to the portfolio management. Agenda for today, as I said, first the concept, then categories, then we will talk about the rebalance, then we will talk about the DeFi revenue. I will show you my dashboard, and we will talk what we could do, how to take the information from the market to get the best result in your portfolio. In the end, I will show you my own portfolio and how it looks like and what I'm doing. So I would love to start actually with the concept of the portfolio management. The idea behind portfolio management is very simple. You are not playing the game in a casino. You are watching how the grass is growing. That's actually what more about the portfolio management. In the concept, a lot of people in crypto think that, okay, I could invest $1,000 or 10K, and tomorrow I'm gonna get 100,000 or 1 million, will get rich and then go to Monte Carlo or Las Vegas and spend all of this money. No, it doesn't work like this. It works only if you will go in the casino and you will try to bet with your own luck. And regarding the portfolio management, you need to have the financial literacy and understanding that is not going to be fast and is not going to be tomorrow. It may be going to happen in a couple of years, but not tomorrow for sure. Even if you are looking around the market and hearing and seeing the stories, how the people getting rich ridiculously, this is most of the time not true, and just don't be a fool. That's a work, like regular work. When you're doing something, you're understanding how the money works, you understand how the market works, and you are putting the money to work for you. So this is not easy. That's what first you need to understand. You need to set up the goals, and you need to have the mentality. For example, what about the goals? If we could see the cycles over the past years, the Bitcoin growing maybe 2x or 4x, or maybe 5x sometimes. Right now it's even lower, it's like 2 or 3x. What you need to do with your portfolio, ideally outperform BTC. It's actually very hard to do. And if anybody on the market asking you like, hey, you could provide money to our fund or something, you could just speak with them. Hey guys, are you outperforming BTC? If no, thank you so much. So the mentality behind should be like, you are doing your savings and investments, and you have the framework how much it could grow up and how much it could fall down. And in this framework, you might understand that with much risk you're taking, you could get a lot of profits, but with less risk you're taking, you will get less profits. In the same time, with much risk, you could fully be wrecked and have zero money in the portfolio. With less risk, you could survive. The idea in this market is survive as much as possible. Why? Because on the long term, you have opportunities and you could leverage those opportunities. And why it's happening? Because you are living a long time in the market, not just putting the bets, then nervously crushed everything and you're going out. That's it. So to avoid this, you need to have a goals, financial goals, like in the very beginning of the cycle, the market could grow maybe 2-3 times, not much. then you need to have a mentality that you are here to build a wealth, not to play in the casino. Then the second part of the concept is the categories. Means that you need to divide your assets at least between the stable coins and the volatile assets. We'll talk about this later. Then you need to do the rebalance between the stable coins and the volatile assets. After that, if you are already successfully managing your portfolio just with the assets, you could put them to work. So you could go to DeFi, provide liquidity into liquidity pools or lending protocols, and you could get some farming rewards on this because you're just giving your liquidity to someone for swaps or for lending and borrowing, and they're gonna pay you a commission for that. Then I will uncover how to do the accounting, so what kind of dashboard you need to have. And then we will discuss the things about the DCA, how to get in and get out. And all of this, 6 points, this is the general concept. So let's start with the categories and the rebalance mechanics. The idea here that you are not trying to estimate or predict the price, it going up or going down. And actually funds, the big funds, they're not playing this game. They didn't have any Wanga inside of the team to say the price will go up tomorrow and going down after a couple days. What they're trying to do, they always have cash or stable coins and volatile assets. And they are managing the proportion between the cash and the volatile assets. So they just changing how much USDT they have and how much volatile assets they have. That's it. That's the first thing about the categories and rebalancing. Then you could divide it into the more categories. Like, okay, we have an asset class. Could be Bitcoin and Ethereum. They are long-term. We are believe in them. And Ethereum, there's a very big, huge ecosystem. Bitcoin is a digital gold. So we are believing them. And there could be long-term. We could survive the market crash with Bitcoin and Ethereum. And we are believing that it's going to go much more higher than right now. Then we could have some altcoins or gamblebacks category, where are all of the funny tokens or altcoins sitting. They could crash dramatically even to zero because the team behind just could spend all of the money and wouldn't have any budget to continue development. But they could rise very dramatically too, and you could earn a lot. And in this game, we are trying to rebalance our portfolio between the stables and the volatile assets. And actually what I want to show to you that we build a platform where you could find all of this education and portfolio reports from our own portfolio. We started doing this last year and it was 100K in the very beginning. Right now it's 204K, and we saw dramatically growth, and we saw actually some minuses, and we fell down with the portfolio. For example, report number 5, 8th of March, minus 73K. Then another one report, May 28, we earned 87K. Is everything described here? You could just go and check what's here, what's the fundamental analysis we are doing, what's our categories, how we manage this, how much money we earning from the farming, everything described here. More of this. You could just take the address, because everything is trackable. You could take the address, you could go to debunk, that's the portfolio tracker, you could paste it here, and you will find that actually all of this is real. So there's not just funny screenshots. With BNL, is everything on chain here, and you could find out how it works. Of course, the others we will change because we're usually doing these reports monthly or 1 and 2 months, but everything is proofable. That's what you need to understand. And we are managing this according to this concept. So that's the first thing, the categories and rebalance. And the funds just playing between the amount of stable coins and the amount of volatile assets. They're also dividing their portfolio into different categories. And for you is also a case because your friends may play with the meme coins and say to you like, hey brother, we are earning a lot, you should do this, you should gamble on the whole debt. But the thing is, you shouldn't, because you're gonna lose the money. And in this case, to not lose this FOMO, you could allocate 2 or 5% of your portfolio and play with the meme coins. It will grow up perfect, it will fall down, doesn't matter. You will take this emotion if you like it. I don't like it personally. So regarding the rebalance how to do this rebalance. What I want to show you actually the calculation firstly, what means to doing the rebalance and how it works. I prepared here a spreadsheet and we could go through. So let's assume that we have $100,000 divided into 4 categories: stablecoins 30%, long-term assets like Bitcoin and Ethereum 40%, good farming, it could be altcoins 20%, gamblebacks 10% only. Then, for example, the crypto from this point, the whole market in general, will go down dramatically, like in 2018. What it means the stables will be the same, then the long term gonna be divided by 3, so dramatically means 3x less. And from 40k you will get only 13 or maybe 12k. Then from good farming or from altcoins you could get only 250, maybe 2500 in general, because I dividing this to 8. That's how it's happened in 2018. Dramatically losses. Gamblebacks actually 0. You could just, divide to even 100. But let's assume that they're going to be 10x down. Then the another one, the crypto could go up and you could get twice much in the long term. BTC could rise from 60,000 to 120k. Then altcoins could rise even more dramatically. Camelbacks, of course, they could rise a lot. And that's the framework from up and down, what you could get if you will use those categories. And that's actually what I said before here, the goals and mentality. You might to understand that to earn from 100,000 and $1 million, you need to put everything in gamblebacks. But in the same time, gamblebacks could rise a lot, there is, but in the same time, they could fall a lot. And that's the thing. With much risk, you could take a lot of profits, but with the same amount of risk, you could lose everything. And that's the thing. You need to have this framework. You need to set up this framework for you, for your crypto portfolio, to understand how much it could grow up and how much it could fall down. Then, if we, for example, gonna do no rebalance, before this is the framework. So you could lose 53k if you invest right now and the crypto fell down right after you're gonna invest, or you could earn another 100k if the market will grow up. Then, if we wouldn't change anything after the crypto will go up. So for example, crypto is going up, you are very happy, and then crypto is falling down like it was in 2018. What we can get, there's some numbers in this spreadsheet, and just look, dividing by 3, dividing by 8, you could lost 140k. And in general, from the initial investment, it could be minus 31k. But the thing is, if you will just follow your rule with the categories, and if you will do the rebalance after the crypto is going up, what you could get. So for example, if the crypto is going up, we still have 30k because all of them are stables. Long term, 80k. Everywhere here is 80k. But then altcoins 60, gamblebacks 40. Total 210. But if we will, following the formula of our percentage division, we will get after the rebalance 63k stablecoins, 84k in long term, something in altcoins and something in gamblebacks. And then if crypto will fall down, we actually gonna lose only $1,000 from initial investment. But you will say, okay, but we're still losing money. What are you talking about with your rebalances? Doesn't work. Look, okay. Then what actually funds doing? They are changing this proportion based on the market conditions and based on the cycles. If the global crypto market cap is going up, they are increasing the percentage of the stable coins and decreasing the long-term assets and the good farming and the gamblebacks. And if you will follow this second rule in rebalancing, what you could get. For example, crypto is going up, all of the same, then we're doing the rebalance, but we already have 60% in the stable coins because the market is very high, and we will do this rebalance. We will get 126k in the stable coins and 42k in long term, 21 in good farming, and in the gamble bags. In the end, if right after that the crypto will fall down dramatically, you will still have some earnings from initial investment, and that's going to be the difference here. And this is actually very nice thing, because you are invested 100 and you will get 144k in the end. So it's 44k plus from your initial investment. And that's the idea, what you could earn and how you could earn with just following the rebalancing rule. This is it. I think this number is not correct, because what we should do, we should take this one and minus, yeah, there is. This one is true. So it's going to be 44k more than initial investment. That's actually how two things in our portfolio concept works, dividing into the categories and doing the rebalance. Then you will ask me, okay, that's very nice, but how we will identify on the market the time when we should do this rebalance and when we should change the percentage in the categories here from initial, for example, to following or to different ones? What I'm using for this? Two simple metrics. First one, on the CoinGecko, you could jump into market cap for the whole crypto market cap, and what we understand from this chart, that every time the global market cap of the whole industry grew up 2x, 3x. So from the very beginning, $1 trillion here, around $1 trillion. Here is 2.8, 2.7. Right now is 4. So what I believe is going to be maybe 4.5 or 5 in the end here. And that's going to be the end of the cycle. What it means? It means that we already grew up a lot and we still have some upside, but it also means that we should have more stable coins than volatile assets, because we grew up from actually $1 trillion to $4 trillion. There is 4x already. It could be 4.5, could be maybe 5 in a very good scenario. But in general, you need to have more stable coins right now on the market, and that's what actually I have in my reports here. So we have 93% of stable coins and 7% of crypto right now. And actually our portfolio earning 4k months, because we are providing all of this money to DeFi protocols and we're receiving farming rewards. That's another one topic what we will discuss. But again, how to find the place in the market to do the rebalances. Then what you could check, you also could check the CoinMarketCap Crypto Fear and Greed Index. That's the index which showing us where we are on the market, on the very greedy region or very painful region. Very greedy region means that after that we will fall down. Very painful region means that we could grow up after that. So after the tariff drama and during this drama, we had maximum pain actually, like extreme fear. Everyone collapse, everything collapse. Everyone say that they're going to be the recession and we need to sell everything. There's no future. The gold rising, and after that we grew up a lot, actually from 75k here to 120k, 2x on the BTC. And you could do your rebalancing based on this chart and this analytics. I'm also using the US dollar index. When it grew up is risk off, when it fell down is risk on for the money and the global liquidity. Another one, this is the global liquidity chart, which is correlating with the Bitcoin here, and we are still rising in the global liquidity, and the Bitcoin is following our trend, and the whole industry is following our trend. Actually, S&P 500 also following this trend. Then we could went down, and I do believe that the market will follow this trend. In general, we already grew up a lot from the bottom of the cycle, and we will have some falls, some drops, very deep. We're gonna dive. Why? You will say, okay, there is a lot of ETFs right now and there is a lot of institutional liquidity. There is, but you could check the S&P 500 chart and go here to maximum or even 5 years, and for some reason S&P 500 is also falling down. You will say, okay, but there is the economy. There is the economy, and you will see this in the Bitcoin too. And this doesn't matter. The treasuries, professional investors, ETFs, they have not only the buy button there, they have a sell button too. And sometimes they pushing sell button. Even the Michael Saylor will push the sell button. And then it's gonna be amazing opportunity for you to earn on shorts, on options, or even just buy Bitcoin on a huge sale. So there is very good thing to understand that there is no unlimited upsides and unlimited growth. Is always growing up and falling down. That's how the economy works. Not only the crypto economy, the world economy. Based on all of these indicators and the market understanding, it's not the technical analysis. It's more about the economy. It's more about the cycles. You could divide your assets into the categories. First to stables and the volatile assets, then you could divide into more categories, and then you could do the rebalance based on at least the crypto market cap and the whole TVL of the industry. So when it's growing up, you have more stable coins, less volatile assets. When it's falling down, you have more crypto, less stable coins. That's it. Then you could also have the DeFi revenue. As I showed to you, our portfolio with 200,000 earning 4K, 4.5K a month. I will show you how it works. So because you always have stable coins and you also have volatile assets, you could put them into the work and you could provide liquidity, for example, to different protocols like that one. It's StakeDAO. There is a pool pre-USD and SRV-USD, 25% APR. I put it here 40K and I'm earning some reward every day, every hour. The same I'm doing with the StakeDAO. Here is 156K, already earned $500 and that's amazing. You could be not smart, not pretty. You could just have the money, and because of this, you're earning money. As me, this is very simple. And that could be also the another one part of your portfolio, just to put your money on work. That's it. You have free earnings here, but there is additional risk that you need to understand here, because there is all of these applications, they are built on the smart contracts made by people making mistakes, or they could be just, not brave, not honest. They could steal your money, as everything could happen in crypto, because there's a wild west still, especially on chain, and there is a lot of risks. The volatility of assets, the DBACs, the smart contract mistakes and bugs, hacks also, even the blockchain could stop and the wallet could be hacked. So there is additional risks. You always, with additional profit, taking additional risk. You might understand your risk profile, and please do not invest anything you wouldn't able to lose and then just survive in your life, because this is very important and very risky. Next, if you are having a part of your portfolio for the long term, there could be used in some protocols with a leverage to, for example, have more efficiency on your capital. That's actually what I'm doing. And here, 7% in crypto, which are actually, if you're gonna be 200,000 and 3, 9, 10, sorry. There's 7%, it should be only 13K, but this is not true. Why? Because I am using leverage here. Everything described into the report. What I'm doing here, here is the long-term assets in this category, which are long-term assets, all of the wallets, everything is here. What's here is actually the leverage. There is 44K instead of 14, but I had a loan of 30K. I'm using LlamaLand, that's the best lending protocol on the market made by Curve. Another one, the best DApp, already proved themselves for 4 years on the market, just 4 years on the market. The whole financial system is 300 years. And it looked like this, and what you could do here, you could leverage your volatile assets with borrowings. You could just provide your BTC or ETH and then borrow stable coins and buy again BTC and ETH, put it into collateral, means you're getting the leverage, and means you get more efficiency on the capital, again with another one risk. But in general, here is not the 7%. It's a 7% because the whole category is 44K minus 30 is 14, means it's 7%. But it's 44K on the upside. So if Ethereum grew up, I earn more than I just will have 14K in Ethereum because I have 44. That's what I'm doing, and that's also how I'm using DeFi and decentralized applications to have more capital efficiency. But again, you should consider the risks and you should understand how it works. You could go to our community and our channels. We will describe how this protocol works and what you could do with this, because soft liquidation is much more healthy actually, and they're not taking all of your collateral like it works on purpose. So dashboards, you need to have an accounting system for your portfolio, and this is actually very important because the money likes when you're counting all of your assets, all of your money, and this is one of the important things that the dashboards like Dbank or Zap or Zerion, they just wouldn't satisfy you because they're showing you your holdings here, but they didn't show you how much you earn a day, what's your upside and downsides, what's your risks, where your assets are located around. And for that, I built actually I built a dashboard, but it will be way more difficult for you to use my one. I will show you, of course, but you need to take 5 points into account and build your own. So you need to have an accounting for all of your assets, all of your positions, all of your categories. You need to have earnings estimation, like how much you're going to earn and the fact of those earnings. Also, you need to understand your framework with losses and winnings, and you need to have your action tracker or not taker. So I did that and that, the result this one. Am I right? Yes. Am I right? No. Why? Because that and that, and I didn't account all of the things. I should be more clever. I should be more dive deeping into the research, and that's actually why each fund and each trader had their own action not taker. Then you could merge it with your own financial planning and a risk model. So what actually I did, we could go here and check that one. That's how it looks like. The first one here on the left, I'm taking into account all of my positions. That was a dashboard from 2022, so I can easily show everything. Right now, I'm using this kind of model with the reports. Works way more better. Actually, I'm able to show them to you. Here, for your own purpose, you should have all of the links to the protocols, assets, category, ecosystem, how much money, what's the APY there, yearly, daily, then how much you're earning daily and monthly, action tracker if you need, for example, go to any DApp and claim rewards here, because rewards are in volatile assets, and sometimes you need to claim it even every day because those assets could fall down and you need to claim it and sell into USDT, for example. Then here is the same division that I showed you, the categories, how much money we do have in those categories, yearly APY, how much we earn daily, monthly, what's the percentage of the category, the framework of falling down, how much we could lose if a crypto will fall down right now, how much we could earn if crypto will grow up from this moment. Then there's just the technical things, actually to have the chart, how much money we have around the different ecosystems, and your note taker here to set up a date and your note that I did that one, this is a result. You could combine it with your own financial planning. So how much income you have during the year, different months, how much you're spending on your life, how much savings you are doing, because this is the portfolio management and financial literacy and investments, not a gambling. And it's fully correlating with the savings. Then how much you could save in total. And you could build some charts here to understand actually your total capital expectation till the end of the year, how much you could get. If it's this your target, that's perfect, amazing, you're fitting the target, nice. You could build also another one chart to see regularly your savings, income and spendings. Actually could be even a fact chart. You could change it and see, okay, that's true, that's not true, here I had more losses, here I had more wins. And this is the ecosystem chart with a division around the ecosystems. So this is one of the ways what you could do with your own portfolio, but as I said, it's gonna not look very easy. You should take into account only 5 points here. They are very important, and you could build your own dashboard. This one you will find in our platform here in Education tab. Then we're almost done. So what do you need to do? You need to do your constant research, and you need to understand actually the market, because you wouldn't be able to invest if you do not understand what kind of asset in your portfolio, how it works, why it grew up, why it fell down. This is constantly researching not only the crypto market, the stock market too. They're very good. You could diversify your savings between the crypto and the stock market, and that's amazing. And in the end, my portfolio and stablecoin opportunities. So on this platform, you could jump into portfolio reports and find out everything what we are doing. Also, we are providing the farming reports here, where you could find the best farming opportunities right now on the market. We are searching across a different ecosystem, across the different data sources, applying our model to filter it, and even some of them are used in our portfolio, like USDC, USDF, which I showed to you here, and which already put it into portfolio reports. We also have an AI chat where you could ask, hey chat, let me know please how I could stake my and your amount, and the chat then will give you some results based on our database. Then we will have also stock investments. We will uncover this category in our platform very soon. It's going to look like the portfolio reports, but not about crypto, about stocks. We're working on this, we're working on the model, and we are building those reports in the same manner. So soon you're going to be able to check it. So this is it. Thank you very much, and see you soon in another episode. I hope you will get some information to build your own portfolio, and the main thing you need to understand, this is not a gambling. This is like you're watching your grass growing. Thank you.